FedEx began in 1971, founded by Frederick W. Smith, who envisioned an integrated air-to-ground system that would revolutionize shipping. Today, FedEx operates in over 220 countries and territories, employs over 600,000 people, and maintains a ground fleet of over 180,000 vehicles. The company's air fleet includes 680 aircraft, facilitating a global supply chain that handles approximately 17 million packages daily. In fiscal year 2023, FedEx generated $93.51 billion in revenue. But the path to this success wasn't always smooth. The backbone of FedEx's logistics is its ground fleet, which covers an astounding 2.5 billion miles annually. Their vehicles range from smaller delivery vans like the Mercedes-Benz Sprinter, which averages around 14 to 18 miles per gallon, MPG, to larger semi-trucks like the Freightliner Cascadia, which achieve 6 to 8 MPG. FedEx's semi-trucks alone consume an estimated 200 million gallons of diesel fuel each year, resulting in an annual fuel expense exceeding $800 million. To mitigate these costs, FedEx has been implementing advanced telematics systems to monitor fuel efficiency, reduce idle times, and optimize route planning. This system has enabled the company to save approximately 5% in fuel consumption annually, translating to tens of millions in cost savings. The late 1990s saw FedEx's aggressive expansion into the ground delivery market with the acquisition of RPS, now FedEx Ground, a move that expanded their market share against rivals like UPS. This strategic diversification allowed FedEx to tap into the booming e-commerce market as online shopping began its meteoric rise. By 2005, FedEx's average daily ground package volume had reached 4 million parcels, driven by partnerships with major retailers like Walmart and Target. FedEx's expansion strategy continued in the 2000s with the acquisition of Kinko's, which was rebranded as FedEx Office. This move not only bolstered its retail presence, but also created a network of convenient drop-off and pickup locations across the United States. By integrating these services, FedEx positioned itself as a one-stop shop for both shipping and office needs, boosting annual revenues to over $24.7 billion. The financial impact of fuel costs and fleet modernization. The cost of operating a massive logistics network is substantial, with fuel being one of the highest expenses. In 2022, FedEx's fuel costs constituted nearly 15% of its total operating expenses, amounting to over $4.7 billion. To reduce its dependency on fossil fuels, FedEx has invested in hybrid and fully electric vehicles like the BrightDrop EV600 electric van, which offers a range of 250 miles on a full charge and zero emissions. These eco-friendly investments are expected to increase the fleet's average miles per gallon from 6 miles per gallon to 10 for trucks, while the electric vans will cut costs by reducing diesel consumption by 15 to 20%. By 2030, FedEx aims to have 50% of its pickup and delivery fleet running on electric power, saving an estimated $500 million annually in fuel costs. Challenges of the 2008 financial crisis and beyond. The 2008 financial crisis dealt a severe blow to FedEx's revenue, as global trade contracted and businesses scaled back on shipping expenses. During this period, FedEx's package volumes dropped by nearly 10%, and its stock price fell by over 50%, from a high of $96 per share in 2007 to a low of $46 in 2009. To navigate these challenges, FedEx adopted a series of cost-cutting measures, including reducing its workforce by 10% and temporarily grounding older aircraft to conserve fuel. Despite these efforts, the company's operating margin was reduced to a mere 4%, far below its target of 10%. It took nearly 5 years for FedEx to recover fully, returning to pre-crisis revenue levels by 2013. The Amazon effect and e-commerce competition. FedEx's most significant challenge in recent years has been the emergence of Amazon as both a customer and a competitor. Amazon once accounted for 13% of FedEx's total revenue, but eventually built its own logistics network, significantly reducing its reliance on third-party carriers. By 2023, Amazon Logistics handled over 60% of its own shipments, severely cutting into FedEx's market share. In response, FedEx severed its ties with Amazon in 2019, choosing to focus on serving other e-commerce giants like Walmart, Target, and small to medium-sized businesses. This strategic pivot aims to diversify FedEx's client base and reduce its dependency on any single retailer. Sustainability efforts and future projections. FedEx has set ambitious goals to achieve carbon-neutral operations by 2040, investing over $2 billion in sustainable energy initiatives. The company plans to replace its entire fleet of diesel trucks with electric vehicles and hybrid models by 2035, which will reduce its carbon footprint by nearly 30 million metric tons annually. FedEx is also exploring the potential of biofuels for its aircraft fleet, aiming to reduce jet fuel consumption by 20% by 2030. Currently, FedEx operates one of the most fuel-efficient aircraft fleets in the world, with its Boeing 777F and 767F models consuming 18% less fuel than their predecessors, saving the company an estimated $500 million annually. Current state and future vision. As of 2023, FedEx continues to hold a dominant position in the logistics industry, with a global market share of about 25%. Despite challenges from new entrants like Amazon Logistics and the rise of digital disruptors, FedEx's commitment to innovation keeps it at the forefront. The company's initiatives in automation, drone technology, and AI-driven logistics are set to revolutionize the way packages are delivered, with projected annual savings of up to $1 billion by 2030. FedEx is also leveraging its position in the global supply chain to expand into markets in Asia and Europe, aiming to increase its international revenue share to 40% by 2025. The focus on global expansion is crucial for sustaining growth in a competitive landscape and achieving long-term profitability. Conclusion. FedEx's journey from its pioneering days in overnight delivery to its present-day global logistics empire is a story of vision, innovation, and resilience. The company has faced numerous challenges, from economic downturns and rising competition to the evolving demands of e-commerce. Yet, through strategic acquisitions, investments in technology, and a relentless pursuit of sustainability, FedEx has remained a leader in connecting the world. Looking ahead, the company's future will depend on its ability to adapt to new technologies, embrace sustainable practices, and continue innovating in a rapidly changing global market. As FedEx strives to achieve its ambitious goals, it remains a symbol of progress in the logistics industry, delivering not just packages, but a legacy of transformative growth.